Cryptocurrency. Bitcoin has not just been a trendsetter, but has also started the wave of cryptocurrencies, which is responsible for the shift from paper money to digital currency. But what is cryptocurrency really, and does it even hold a promising future? Keep watching this video to find out more on cryptocurrency. Cryptocurrencies emerged as a side product of another invention. Satoshi Nakamoto, the unknown inventor of Bitcoin, the first and still most important cryptocurrency, never intended to invent a currency. In his announcement of Bitcoin in late 2008, Satoshi said he developed a peer-to-peer electronic cash system. Every peer in the network needs to have a list with all transactions to check if future transactions are valid or an attempt to double spend. In order to achieve consensus without a central authority, the entries in the database are limited and no one can change them without fulfilling specific conditions. This may seem ordinary, but believe it or not, this is exactly how you can define a currency. The word cryptocurrency is derived from the encryption techniques which are used to secure the network. It uses an online ledger with a strong cryptography to secure online transactions, making it nearly impossible to counterfeit or double spend. The defining and noteworthy feature of cryptocurrency is that they are mostly not issued by a central authority. Therefore, they are rendered as theoretically immune to any government interference or manipulation. A cryptocurrency like Bitcoin consists of a network of peers. Every peer has a record of the complete history of all transactions and thus the balance of every account. A transaction file will state that person A gave X amount of Bitcoin to person B, which is signed by person A's private key. It uses basic public key cryptography and after assigning a transaction is broadcast in the network, sent from one peer to every other peer, which is P2P technology. These transfers can be done with very low minimal processing fees, allowing users to avoid the extremely high fees charged by traditional financial institutions in the form of taxes and user fees. Cryptocurrencies work using a technology called blockchain. Blockchain is a decentralized technology spread across many computers that manages and records transactions. Part of the appeal of this technology is its security. Cryptocurrencies are systems that allow for secure payments online, which are denominated in terms of virtual tokens, which are represented by ledger entries internal to the system. Confirmation is a critical concept in cryptocurrencies. You could say that cryptocurrencies are all about confirmation. If a transaction is unconfirmed, it is pending and can be forged. When a transaction is confirmed, it is set in stone. It can no longer be changed or reversed. It is part of an immutable record of historical transactions of the so-called blockchain. Bitcoin, as of December 2020, has experienced a steady rise to reach new all-time highs, breaking through $20,000 per BTC. Cryptocurrencies like Bitcoin and Ethereum have indeed proven resilient. Investor interest, both retail and institutional, in digital currencies has risen dramatically in recent months. Many early investors who were eager to make gains from the cryptocurrency craze have since moved on to other ventures. But there are still reasons to believe that the cryptocurrency industry has some fight in it left. Mostly due to its revolutionary properties, cryptocurrencies have become a success. With time, it has the potential to gain the attention of influencers and other big companies. Institutional investors allow for significantly larger trading volumes than most individual investors, meaning that even if fewer trading partners are transacting in the digital currency space, the industry can still sustain itself. There are several potential developments projected to take place in 2020 and 2021 that could significantly impact institutional participation in the digital currency market. If crypto is floated on the NASDAQ or a similar stock exchange, for example, it will immediately get a boost in reputation and hence in value. Cryptocurrencies gave birth to an incredibly dynamic, fast-growing market for investors and speculators. Exchanges like OKCoin, Poloniex, or Shapeshift enable the trade of hundreds of cryptocurrencies. Their daily trade volume exceeds that of major European stock exchanges. At the same time, the praxis of initial coin distribution, ICO, mostly facilitated by Ethereum's smart contracts, gave life to incredibly successful crowdfunding projects in which often an idea is enough to collect millions of dollars. In the case of the DAO, it has been more than $150 million. The field of cryptocurrencies is always expanding, and the next great digital token may be released tomorrow. There are more than 5,000 cryptocurrencies in existence as of January 2021, according to CoinMarketCap.com. While many of these cryptos have little to no following or trading volume, some enjoy immense popularity among dedicated communities of backers and investors. The most popular cryptocurrencies of today include 10. Bitcoin, the one and only, the first and most famous cryptocurrency. Bitcoin serves as a digital gold standard in the whole cryptocurrency industry, is used as a global means of payment, and is the de facto currency of cybercrime like darknet markets or ransomware. After 7 years in existence, Bitcoin's price has increased from zero to more than $650, and its transaction volume reached more than 200,000 daily transactions. In the least, Bitcoin is here to stay. 9. Ethereum. The brainchild of young crypto genius Vitalik Buterin has ascended to the second place in the hierarchy of cryptocurrencies. Other than Bitcoin, its blockchain does not only validate a set of accounts and balances, but of so-called states. This means that Ethereum can not only process transactions, but complex contracts and programs. The goal behind Ethereum is to create a decentralized suite of financial products that anyone in the world can have free access to, regardless of nationality, ethnicity, or faith. 8. Litecoin. Litecoin was one of the first cryptocurrencies after Bitcoin and tagged as the silver to the digital gold Bitcoin. Faster than Bitcoin, with a larger amount of token and a new mining algorithm, Litecoin was a real innovation, perfectly tailored to be the smaller brother of Bitcoin. 7. Ripple. While Ripple has a native cryptocurrency, XRP, it is more about a network to process IOUs than the cryptocurrency itself. XRP, the currency, doesn't serve as a medium to store and exchange value, but more as a token to protect the network against spam. 6. Monero. Monero is the most prominent example of the CryptoNight algorithm. This algorithm was invented to add the privacy features Bitcoin is missing. Monero is a secure, private, and untraceable currency that uses a special technique called ring signatures. 5. Binance Coin. Binance is one of the few cryptocurrencies to reach its peak after 2017. During that year, there was a bull market and the price of all cryptocurrencies rose on it, reaching a peak before plateauing and decreasing in value. 4. Cardano. The Cardano network has a smaller footprint, which is appealing to investors for several reasons. It takes less energy to complete a transaction with Cardano than with a larger network like Bitcoin. This means transactions are faster and cheaper. 3. Polkadot. Polkadot was created by Ethereum leaders who broke away to form their own cryptocurrency with a better network. Instead of having a single lane to complete transactions in, Polkadot has several. 2. Chainlink. Chainlink is unique as a cryptocurrency because it has an appealing price. While the shares are affordable to buy, they're also priced high enough to not be considered penny stocks. This is appealing to investors because it has proven it can increase in value, and there's still a lot of room for growth. 1. Stellar, XLM. Stellar's Lumens, also known as XLM, was established to serve a niche need within the world of cryptocurrency. It's essentially the PayPal of cryptocurrency networks, serving as a bridge between banks and blockchain networks. A cryptocurrency is the strongest currency that exists. It is different from other currencies and stands out as the value is derived solely by its supply and demand. The demand is dependent on the trust the consumer has on the currency as a medium of exchange. The trust factor is common to all currencies, but the demand for a currency that is not subject to government control is slightly different. Cryptocurrencies are digital gold, sound money that is secure from political influence. Money promises to preserve and increase its value over time. Cryptocurrencies are also a fast and comfortable means of payment with a worldwide scope, and they are private and anonymous enough to serve as a means of payment for black markets and any other outlawed economic activity. While it's difficult to say which, if any, digital currencies will see dramatic price gains in 2021, we can say with confidence that cryptocurrency is not going away anytime soon. Blockchain, the underlying technology behind many cryptocurrencies, has spread far outside the digital currency industry and is likely to see new applications this year. We do know one thing for sure. Cryptocurrencies were once positioned to upend the entire financial system. That kind of noise doesn't disappear overnight, so expect to hear from cryptocurrency for a while. If you liked this video, then make sure to give it a thumbs up and subscribe to our channel for more interesting videos in the future. Also, hit the bell icon to stay up to date and be the first one to watch our latest videos.